Today, we'll be comparing Spain, a historically popular destination for expats, tourists to visit and to live in, but often stigmatized as not friendly from a fiscal perspective with high taxes. From my experience in Spain, I find the Agencia Tributaria in Spain are very strict and they
know everything.
They know everything.
They want to know every operation.
And its neighbour Portugal, which increased significantly in popularity over the past few years due to its tax breaks and attractive benefits for foreigners, but which recently seems to have changed course. The NHR.
It was quite an advantageous tax scheme. As you said, it ended last year. The new scheme resembles a little bit the NHR in this sense. However, it's not that simple to follow it in the other requirements. In these governmental elections, we could have new changes happening until the end of the year.
Keep watching to find out the answer to the big question. Which country is better from a tax perspective, Spain or Portugal? Hey guys, it's Johnny. Welcome back to Millennials with Money for a very special video today. I'm in Lisbon with Marilo and Pedro from Fresh Legal. So Marilo is an expert when it comes to Spanish tax and Pedro an expert when it comes to Portuguese tax. Guys, thank you so much for having me and letting me ask you some questions today. So let's start with the big question. Which country is better from a tax perspective, Spain or Portugal?
Well, I guess it depends on the profile of the person that we're talking about. Depending on your circumstances and depending on what you're looking for in Europe, maybe it would make more sense to use the schemes in Spain rather than those in Portugal, especially with the recent changes in Portugal that we're going to talk about. But if it goes the other way around, maybe if you have a certain profile and you want to live in Portugal and you have some preferences here, if you have a certain a feeling of investment in Portugal that could correlate to what Portugal is also looking for, it could also make sense to use Portugal.
Yeah. Totally agree, depending on the circumstances. So you need to look for the specific case and then to compare both countries. Sometimes will be Portugal and sometimes will be Spain.
Yeah. All right, so let's get into some of the specific advantages that exist for foreigners. So in Spain, we obviously have the Beckham Law. In Portugal, up until the end of last year, we had the NHR, but I understand there is a new version of the NHR coming out soon. So Marilo, tell us maybe a little bit about the Beckham Law.
So the Beckham Law is only for individuals. So we see Portugal, so we boost the cases, and now we have a lot of cases. They are for employees, for normal digitals, for directors of some entities, and some kind of entrepreneurs. So if you are in this specific case, you can benefit for that regime that allows to pay only 24% only on the Spanish income.
Okay.
The rest of the income, foreign income, is not taxed in Spain, except for the work income. Work income is worldwide.
Okay.
But the tax rate is always 24%.
So in summary, 24% flat rate on Spanish source income, and lower income tax is leveraged by Spain from sources from outside of the country.
Yes.
Okay. And how long can someone benefit from the Beckham Law?
It's the first year that you are in Spain, you are tax resident in Spain, and the following 5 years.
Okay.
So in total 6 years.
Okay. And who exactly is eligible to benefit from the Beckham Law?
So employees who came from the first time in Spain and work for a Spanish entity, digital nomads that work in Spain but the entity are in another country, directors of the legal entities, entrepreneurs that they have some can have a contract with an entity of R&D, and some of if they do training activities, or some kind of entrepreneurs that has a very innovative project, but they need to be a certification for the ministry.
Okay. Now, Pedro, the NHR, which was incredibly popular, unfortunately, has come to an end in 2023. So can you tell us a bit about what people were able to take advantage of under the old NHR scheme and the new TISRI scheme, which is being introduced soon?
Sure, Jenny. Yeah, the NHR, as you said, was quite popular. It was quite an advantageous tax scheme that basically new people that were arriving in Portugal had. By the time, as you said, it ended last year. We have a transitional period in 2024 for those who become tax residents in 2024. They still can get the benefits from the old NHR scheme if they have fall into some of requirements that are in law, depending. Actually, it is about the immigration procedures having started last year, but they only arrived in 2024. It's at least fair that they still benefit from the NHR. So the benefits from this old scheme were an exemption on foreign associate income under certain conditions related to tax treaty and taxation in the foreign country that we're talking about. And regarding Portuguese associate income, which means basically work that has been rendered in Portuguese territory or any other associate income here related to work. It could be employment or self-employment. It is a 20% flat rate. Pensions, the foreign pensions, they are taxed at a flat rate of 10%. And I mean, it is good for 10 years, so a lot of people here in Portugal will still going to enjoy it for some time. That's one of maybe the slightest difference between NHR and Beckham. There's time frame of 10 years. It starts in the first year of your tax residency, and those who could benefit of it were new tax residents that haven't been a tax resident in the previous 5 years. Okay? Yeah. So basically this is the overview of it. There's always some slightly circumstances that could change this allocation of the taxes and the way that this benefits apply, but generally speaking, that's basically the situation. The new scheme that we have branded it as TISRI, it's basically an incentive for scientific or economical investment in Portugal. It's different from the NHR because the conditions are a little bit different. Although it maintains the idea of new residents that haven't been residents for 5 years, so it resembles a little bit the NHR in this sense. However, it's not that simple to follow it in the other requirements. So you must be an employee or a board member of a certain company that is certified for certain investments in Portugal, or that has been certified as a startup, which is basically the option that we are most looking forward for now. And we do believe it's going to be quite interesting for those who are digital nomads or eventually have some interest in investing in Portugal and creating new economical branches here in Portugal. And I do believe it's an excellent investment. The TISRI benefits, they are slightly similar to the NHR. The employment income has the same 20% flat rate. However, foreign associate income, including employment and self-employment income, they are all exempt for this period of time, as long as you stay in those conditions of investing in Portugal with a certified company or a certified startup, or there are some other major requirements that hasn't been regulated yet that connects people to the islands, to Madeira, for example. If they have some tie with Madeira, with investments in Madeira, it could result into falling into one of those benefits of TISRI, but we're still waiting for the regulation of all of those aspects. But they are quite similar to the NHR, but with some slightly different reference specifically to the benefits.
So to summarize kind of all of that together, so Portugal's NHR program was a lower tax rate than Spain's Beckham Law and was for a longer period of time. Now the new TISRI program is it's still 10 years?
Still has the same structure after 10 years.
Okay.
However, the difference is that you need to stay under the same circumstances during all this period of time to maintain the benefits.
Okay, yeah. So now it's more restrictive, and probably more people would have qualified for the Beckham Law in Spain than would perhaps qualify for the TISRI.
Probably.
Okay, perfect. So, as a foreigner in Portugal or Spain, working with the tax authorities can be challenging in both cases. So what are the reporting requirements in both cases? Marilo, start with Spain. If you're under the Beckham Law, how do you go about taking this up with Hacienda in Spain?
So if you are under the Beckham Law regime, the first thing is to apply for the Beckham Law. So it's a simple communication to the tax authorities, but there is not that the tax authority approves that you are in the regime, so they can audit after 4 years. So when you arrive to Spain, if you are in those of that requirements, you have 6 months to apply for that Beckham Law. To apply is to communicate using a tax form. It's very easy, so you need to be registered in the tax office, and then you apply. When you apply, you are a tax resident, but under this Beckham Law regime. So the formal obligations are the same that the rest of the Spanish tax residents. They need to file each year between 1st April until 3rd June a tax form. Is a tax form 151, declaring the income tax in Spain.
Okay.
They don't have to fill the wealth tax for informative wealth tax. And if they have some assets in Spain that exceeds 700,000 euros, they should also file the wealth tax.
Okay.
For the rest, they are exempt.
Okay. Yeah. And so when someone comes to do the annual tax declaration in Spain, will their tax draft, will it take into account already that they're under the Beckham Law?
So they fill this tax form through the tax agency because it's telematic.
Yeah.
So they can have a key from the tax agency. It's very easy. They can go to the website, and they have like a kind of electronic signature.
Yeah.
And they can file easily. It's a tax form that they fill telematic, and it's very easy.
Okay. And do they have to report their income throughout the year, like for example autonomous have to do, or do they just report it at
so
the end?
in Spain the year is the calendar year. So for instance now, 1st April till June, they should file all the income of the 2023.
Yes.
So of the whole year.
Exactly. Okay, perfect. And what about in Portugal? What are the reporting requirements with the tax authorities for foreigners?
So Johnny, yeah, it's quite similar to Spain. However, in Portugal, depending of the year, if it is your arrival year, Portugal practice a partial tax residency scheme. So you basically just report from the moment that you have registered in Portugal as a tax resident until the end of the year. But if you stay as a full year tax resident, you must report your worldwide income to the tax authorities also from the 1st of April to the 30th of June. It's the same tax season. And even if you are under the NHR or the TISRI, you must report your worldwide income. One thing is to report, the other thing is the exemption that might come with that. But you must report everything. You must report also foreign bank accounts in name of the taxpayer. But it's basically that. And it's quite intricate form that must be filled. Sometimes the information could get messy, and especially if you have one benefit like the NHR or TISRI, you must make sure that you have applied for it in the due time, and that you must also make sure that you are filling all the correct boxes in the tax return to make sure that you're claiming all the due benefits and exemptions.
Yeah. And while we're talking kind of about the tax authorities, something that came to my mind, maybe we can talk about as well, is kind of how strict each of the tax authorities are. So from my experience in Spain, I find the Agencia Tributaria in Spain are very strict, and they
know everything.
They know everything. They're watching out for everything, so you have to be very careful, and you should definitely make sure that you do everything correctly. How about in Portugal? How are the tax authorities?
So in Portugal, we have mixed feelings about it. The informatics system from tax authorities is quite accurate. Sometimes it has small flaws, but it works good. So if you fill your tax returns with a certain incoherency, let's say, the system certainly will catch it. It's really good in the sense of catching any mistakes that you do, so you must really make sure that you're filling it correctly because the informatics system will catch it. The tax inspectors they are quite good. However, our experience with the daily bureaucracies, sometimes it's not the best. Certainly they could have a more straightforward approach with the taxpayer, make it more clear to us regarding the information and everything. So even for professionals, it's kind of hard. I can imagine what the taxpayers who wants to get the information must go through. But as a general sense, the tax inspectors are quite strict also. However, the chances of falling into an audit may vary, may be random, so we can't tell them for sure. Certainly, the informatics system will be your first check, so you must be quite aware of what you are communicating as information to them.
Yeah, well, I think in both cases we
have.
have.
So in Spain, so if you are under that regime, if you are an employee or if you are a nomad digital, so normally the tax agency know because the employers withhold you according to this Beckham Law, and if you are a digital nomad, so they have a communication with the social security.
Yeah.
So they, for sure, they know that you are under that system. So it's.
Yeah, it works the same way of Portugal. If you have a strong tie here, they will know in advance any information that might be related to you.
The only thing is like some kind of entrepreneurs that they are like freelancers. So in that cases, probably because there is a very new system, so we don't have any background.
Yeah.
So how they will act.
Yeah. But strong justification to go to a professional to get help in both cases for sure.
Certainly.
Yeah. So a lot of people in both countries may be looking to purchase a holiday home or maybe a home to reside in permanently. So how does property tax work? We'll maybe start with Pedro in Portugal.
Sure. With properties, we have basically 3 stages where taxes might be relevant. The first moment is the moment that you buy the property, because there is basically a property tax in the moment that you finalize the contract regarding the property that you are buying, and there is a varying rate depending on the value of the property. The value of the property normally it's the one that is correlated with the tax authorities. Information. It's not directly related to the value of the sale of the property. So it could go up to 7.5% of the value of the property. So you can imagine if it is a property that has, you know, above €1 million in value, it could get you into some relevant taxation the moment that you are buying it. So the second stage that I can think of, it's about the moment that you stay with the property and you have an annual tax to pay for the property that you own. And this one really varies according to the location of the property. If it's in central Lisbon, for example, it could get high. It's called the IMI, right? The IMI. It's the annual tax that you pay for it. It really varies a lot. Depending on where it is. If you have a home in the countryside, perhaps it will not be that high, it could be less than €100, but if it's in central Lisbon, for example, it could be really high. So it really varies. It's kind of hard to give you a concrete number regarding it. And the third stage that I can think of, it's the moment that we're selling this property. If you're selling this property and if it has increased value on it, if you have any gain with the sale of the property, you will pay capital gains tax on it. And the way to estimate it for real estate property is by getting only half of the gains. 50% of the gains that you have with this property must be reported, and they will be taxed accordingly to the aggregated income, which means all the income that must go through the general taxes. So that progressive scale that scares people so much, that goes from 14.5% to 48% depending on the bracket that you are. So it could really get high depending on the gains that you have with the sale of the property for itself. If you have a primary housing, which means the housing that you are currently living, it's your own habitation, you can get the proceeds of a sale of this property that you want for habitation, and if you get these proceeds to buy another primary residency, you could be exempt of the capital gains tax
Yeah.
It doesn't have to be a property in Portugal, it could be a property in another European Union country.
Okay. And is there a time limit between the sale of one house and the purchase of another that's applicable?
Yeah, but it's a large time frame. Let's say that it's about 3 years after that. So it makes you have enough time to look even for a property after selling it.
Yeah.
It's not that strict that you must reinvest immediately.
Okay. And another question that came to mind is someone on the NHR program who sells a house, would that be taxed under the NHR or would it be taxed outside of it?
Outside of the NHR, because that's considered Portuguese sourced income.
Okay.
So for Portuguese sourced income, the NHR or the TISRI or any tax benefit will only grant you any kind of reduction on taxes if it's related to employment or self-employment income. The other exemptions are for foreign sourced income.
Okay. Perfect. Marilo, let's talk about Spain now. So there's a few taxes in.
For the side of Spain is more or less the same. When you buy a house, you pay you can pay your VAT or we call ITP, a transfer tax. It's about 10%.
Yeah.
But it depends on each community region. But usually it's 10%. The value is now we have it's not the value of the value of the transaction. We have a valor, a new value similar to valor catastral, but it's higher. So you pay taxes based on that value that is very similar to the market value, but it's not the value that you pay for the transaction. The second thing is you need to pay, if you have a property, you pay a local tax, it's the Impuesto sobre Bienes Inmuebles, the EB. IBI, so it's based on the valor catastral. The valor catastral more or less is 50% of the market value, and is about 2%.
Yeah.
The same if you sell the property, you have a capital gain or a loss, so you can pay from 19% till 27-28%. But usually, so because it's a real, it's 23% more or less. Because 70% is from a capital gain more than 200,000, so more or less 23%. And on top of that, if you rent that house, so the rentals will pay as a job income, so you should pay the personal income tax.
Yeah.
If you are under the Beckham Law, you will pay 24% of the net income, and if you are outside of the Beckham Law, you are in a progressive tax rate.
Yeah.
And then if you use that property only to go on holidays as a second residency, we have we call a national tax that is 1% or 2% of the valor catastral.
Okay. Okay.
Yes, I think it's.
Yeah, maybe just coming back to tax on rental income and the ITP tax that we mentioned. Now, unlike Portugal, Spain has autonomous governments in different regions of the country, and they have kind of the authority to apply tax rules a little bit differently. So the ITP, it can vary a little bit by autonomous community, and so can the rental income tax by autonomous community. Right?
Yes.
Yeah. Inheritance and gift tax in Portugal and Spain. So Marilo, tell us about that in Spain. Been a very hot topic over the past year or so, definitely.
So inheritance tax in Spain only applies to tax residents. So if you are tax resident in Spain and your inheritors are also tax residents, so only the tax inheritors will pay taxes. If you are a tax resident in Spain and in the moment of the death your inheritor lives outside of Spain, the inheritors only will pay taxes for the assets in Spain.
Okay.
Okay, because in the inheritors there are only two parts.
Yeah.
And in general, different regions in Spain has modified this inheritance tax. It's Madrid,
Andalusia,
and Valencia.
Okay.
The rest is quite high. You can arrive until 34%. But if the inheritors are the children or their spouse, there are a lot of tax allowances. So you can reach 80% or 90% of the tax allowances. If you are not a children, if you are an uncle or a nephew, so you will pay at least 34%, but it depends on the tax base, on the value of the assets of the person who dies.
Yeah, so direct descendants essentially get a deduction they won't necessarily pay up to the 30%.
But now, so Catalonia is starting to give up also because there is a kind of different competencies between different regions. So I think it's being a lower tax.
Yeah.
Yes.
Yeah. Pedro, what about in Portugal?
So in Portugal, we don't have a proper inheritance tax. Portugal had an inheritance tax in the past, but since the 90s it doesn't have anymore. However, it doesn't mean that the inheritance will not necessarily be exempt. In Portugal, we have some sort of a gift tax that is actually called, in a direct translation, a stamp duty, and it applies to a variety of situations, and it includes donations and includes inheritance. So in the case you get an inheritance and you are subject to the gift tax, it should be a tax rate of 10%. It's quite low. However, if it is, for example, a gift from the lottery, it could get to 20%. So as you can see, Portugal is more interested in lottery rather than your inheritance. However, there is an exemption of the stamp duty regarding inheritance if it is heritage that you get from a direct ascendant, descendant, or from a husband or a wife.
Yeah.
So if there is a direct relation between the person that has given you this heritage, you will be fully exempt to pay no taxes. If
Okay.
it's outside, if it's a collateral, for example, of your family, then you pay 10%.
Okay, perfect. So let me just ask you both as well. So gift tax sometimes runs along the same lines as inheritance tax. Does it differ? Is there any difference in terms of inheritance versus gift tax in Spain and Portugal?
Yes, in Spain, gift tax is because inheritance tax you have a lot of tax allowances for a relation for the relation with the person, the deceased. But with the gift tax, there is not some there are a few allowances, so it's more expensive.
Okay.
The gift tax in Spain.
Yeah, I do believe that the difference is more academical maybe. It's a theoretical structure of what it is an inheritance tax. That's why Spain gives more allowances, because it's structured to think about the heritage that you're getting. The gift tax or the stamp duty, they're generical. They're just a flat rate that it's applied to a certain contract or a certain negotiation. It could be inheritance, lottery, it could be a credit that you get with the bank. It's the same tax applied. So it's not really taught as a tax that must be structured for inheritances. That's maybe the major difference between both of the systems, besides the rates applied.
Okay.
Yeah. And a very important thing is in the gift tax, the person who gives who also pays in the personal income tax as a capital gain.
Yeah.
So it's very important.
Yeah. Perfect. Okay, next question is about crypto tax. So here I think there is quite a difference between both countries. So Portugal, from my knowledge, has been very crypto friendly in the past, probably still even until today, whereas Spain has been quite aggressive in going after people who hold cryptocurrencies as an investment. So Pedro, tell us about the friendly side of Portugal first.
Yeah, Portugal was seen actually as a crypto haven, right? Crypto gains and negotiations were not taxed at all up until the recent changes in legislation. So since 2023, the gains are taxed. However, it's still somehow tax friendly, because if you hold the asset of the crypto for more than 1 year, you are exempt. you're still exempt if you hold for a long time, for 1 year. We know that sometimes those who negotiate with crypto, they are almost day traders. They like to make immediate gain, but in this case, it will be seen as a speculative gain. It's not quite an investment, but a trading. So yeah, in this case, you get taxed, and you must be also careful to not fall into a professional activity as a crypto trader, because the Portuguese tax authorities could understand that this is not only an investment, and it's not only a short-term investment, but it's actually a professional activity. You are earning money monthly with crypto exchanges. Yeah. So if it is a long-term investment, you put money on any kind of stable crypto, let's call it, and stay for years with that, for more than 1 year at least. At the moment that you sell it, if there is any gains, they will be exempt. You still need to report them, but they get exempt. One interesting thing about this scheme on crypto is the fact that if you trade your crypto for crypto, it's not seen as a taxable event. Only when you trade the crypto to fiat, which means the real currency in the real world, this is a taxable event. So if you want to trade crypto for, if it is more of a speculative crypto and you want to, get into a stable phase of your investment, you can change to a stable crypto. Yeah. And this will not be a taxable event, and you can hold it for more than 1 year. Then it's not taxed, unless you really need the currency in your hand, in your bank account. Then we always recommend people not to do this withdrawal of the crypto.
Yeah, perfect. And do you need to report any crypto holdings to the Portuguese tax authorities?
The holdings now, you just need to report any gains that you have with any exchanges that happens.
Okay, perfect. Now let's talk about Spain. It's quite a different story. So
so the tax directorate doesn't say crypto or crypto, so it's the same that another value and another share, so there is no difference. So if you sell or if you have any capital gain, you should pay. That's if you sell shares of anything or if you have interest of any account, so they are taxed. The only thing that we have a lot of problems was with the VAT and the traders, because they said there is a financial or not activity, so there are a lot of instructions of the tax agency, which activity is without IVA, is VAT exempt or not. Yeah. But the rest, if you sell or you have, so it's the same, so no difference. And you need to provide with the information to the tax agency, because the information of the cryptos is very difficult, because usually you have the report, there is a net report, and they need to know each change, every operation needs to be recorded. Yeah. So yeah.
And is there a point in terms of value that you hold that you have to report, or any cryptocurrency needs to be reported?
So no, you need to report any operation. So so it's not. So I have I don't know any. So if you do operations, at the end you have a report. The balance is the net. So you buy for X and sell for E. They want to know every operation. Yeah. So it's quite difficult.
Yeah, so a lot more reporting requirements in Spain.
The formative requirements are very high.
Tax reforms in the pipeline. So as we've talked about already, Pedro, there's a lot kind of going on in Portugal. So maybe tell us if there's anything else.
Sure. I do believe that the most recent tax changes refer to the end of the NHR and this new TISRI scheme. Certainly it will change some perspectives in Portugal. It doesn't necessarily mean that there will be no tax incentives available. It just means that they are a little bit more narrow and a little more focused on certain specific investments that you must do in Portugal to get the tax benefits. We still believe that these reforms will come to do certainly good in the Portuguese economy, at the same time that it's still somehow attractable to the foreign investment and for people who want to live here, and at the same time have a favorable tax scheme available for them. One thing that it's worth mentioning, and it's more about the political scenario in Portugal, the Prime Minister resigned last year, so we have new election summoned for basically this week. We will decide into a new government, and as you can imagine, with all the severe changes that we had in legislation and the political move that we have in the end of the last year, we can expect that if we have a certain result in this governmental elections, we could have new changes happening until the end of the year. So it's somehow still very unclear what will happen, but unclear doesn't mean bad. It means it could generate a good scenario for us to work with, depending on who wins and depending what are the plans of the new government from now on. So until the end of the year, we might have some interesting changes in the course that Portugal is taking regarding the investment, the scenario for foreign investment and the tax benefits derived from those.
Perfect. And Marilo in Spain, so obviously government was elected last year, will be in power for 4 years.
It's a very new government, this government, so there are a lot of pieces in the power, so I think that is nothing in the pipeline, because probably this new government don't last 4 years, I don't know, but it's quite difficult. So for the moment, the only thing is to remove the inheritance tax in Catalonia.
Yeah.
But anything else?
Yeah, nothing else. It seems that any tax reforms at the moment seem to be decisions are being taken at an autonomous level rather than at a central government level. Yeah. Just to finish off, if we think about strategies that someone moving to Portugal or someone moving to Spain might look to implement to optimize their tax situation, what are kind of the things that they might look to do? So Marilo, maybe start with Spain.
If they want to come to Spain?
Yeah.
So it depends. It depends on the circumstance, personal circumstance, and if they came as an employee or a nomad digital, it's very easy. It's Beckham Law for sure. If they have some activity, we can find some kind of special tax areas, as Canary Island. We have a very good system. Or we can find for entrepreneurs or startups that they can benefit from a lower taxation if they use a corporation. Mm-hmm. But we can find also different in different regions some tax exemptions in stamp duties or anything like this.
Perfect.
Yes.
Great. And Pedro, what about in Portugal?
So right now we're facing a scenario of changes. So depending on the profile of the person that is coming to Portugal, it might vary what we can offer them. And well, in the past with the NHR, I would say that almost everyone who's new tax resident would get some sort of benefit, but now it's kind of different. But it doesn't mean that it's not attractive enough. It just means that if you have a certain vein for investments and you want to create, for example, a startup or work with a startup in Portugal, it could be really interesting for you to look for professional assistance in this sense to grant you a certain benefit derived from the TISRI. And as a generical domestic solution, we could perhaps foresee some investments in Madeira and live in Madeira, because you get a reduction on the corporate level and you get also some specific benefits for those who live in the islands. And there are some other domestic solutions that we could create that it's not specifically for immigrants or for someone who is for someone who is a digital nomad of some sort, but certainly there will be solutions that we can offer them.
And so obviously a lot of people move into Spain or Portugal, they might have foreign corporations or entities established outside of these countries. Is there any considerations that these people need to think of before coming here?
So it's interesting for them to have these structures before becoming tax resident for certain specific reasons regarding the compliance. However, the benefits that might come from income derived from these foreign entities, even without a certain tax benefit scheme. With a tax benefit scheme, normally it's even better, but if you don't have it, perhaps besides the reporting compliance that you will have, the result of the taxes might be interesting depending where you incorporate this company, how do you plan regarding it, and doing it in advance, it's really important. Before you arrive in Portugal or Spain, before you plan your life as a tax resident, make sure that you have a plan for you if you want to have an incorporated company in a foreign country, because it might result in a good scenario from the tax perspective.
Yeah. Marilo, anything to add?
So at the level of corporations, we have in Spain, we call ENVEs, que son entidades de tenencias de valores. There are similars in Dutch, in England, I think.
Like a holding company.
Yes, it's a holding company, but the dividends proceeding for the foreign entities are tax exempt in Spain, which is very good. And this is in all the region of Spain. And then we have in Canary Island, we have a lot of some kind of so they should be corporations, and the tax rate is 4%, so it's very beneficiary because of they are not withholding tax when they distribute dividends to the outside entities. And we have we have a lot of dual taxation treaties with in Europe or with a lot of South American countries, and so we have a good net of dual taxation treaties that allows to implement this kind of holding entities that are very good.
So Pedro, Marilo, thank you so much for your time. Wonderful insights. Guys, if you are looking for tax advice when you move into either Spain or Portugal, be sure to check out Fresh. I'll leave the link in the video description so you can get in touch with them. Leave a comment and let me know which one would you choose between Spain and Portugal.
Thank you.
Amazing.
That's it.
And it's a wrap.